Today's guest is Anthony Noto, CEO of SoFi. SoFi is a fintech bank that made a major re-entry into the crypto market this year with the launch of SoFi Crypto, allowing its members to buy, sell, and hold digital assets directly within its app, making SoFi the first nationally chartered U.S. bank to offer in-app crypto trading. Anthony has been the CEO of SoFi since 2018. Welcome to the show, Anthony. We're excited to have you.
Thank you for having me.
We always like to start off by asking our guests, what does crypto in America mean to you?
Oh, a great question. To me, it means making sure that the U.S. leads the world in financial innovation to improve the lives of every person every day. To me, crypto is about using technology to make money move faster, make it easier, make it safer and cheaper, and in doing so, lowering costs for families and also increasing accessibility. I think it's our obligation to champion this shift to strengthen the dollar, to ensure the U.S. sets the standard of global economy and drives the innovation.
Yeah, love that answer. So Anthony, you've had a pretty interesting career, starting out at Goldman Sachs, going over to the NFL, coming back to Goldman, and then a stint at Twitter before joining SoFi. I'm curious, obviously maybe some exposure to Jack Dorsey back in the day, piqued interest in crypto a little bit, but what brought you into crypto and how did you get familiar with that as an asset class, just with your background?
Sure. It was really kind of in the 2015-16 time period. I started learning or hearing more and more about what Bitcoin could be used for. And it's not just a store value or a payment, but more holistically thinking about it as a technology. And I heard many people that were naysayers about Bitcoin saying many of the things I heard from naysayers about the internet back in 99 and 2000 when I was a sell-side research analyst at Goldman Sachs, as the internet started to get commercialized for the first time. And when I heard those same type of naysayer comments and so forth, I decided to dig into it at a technology level and really understand it. And I have a very practical way of thinking about Bitcoin and cryptocurrency generally, that it's a technology and it's a network, and that network can be programmed, the network can be leveraged for a lot of different things. But buying Bitcoin itself is buying a piece of the network and all the future potential of that platform.
I also want to talk about kind of you being early to crypto by Wall Street standards. Back in 2023, you had to drop the crypto investing in order to secure the bank charter because regulators at the time were taking a much tougher stance, so to speak, on digital assets. So your customers, I believe, either moved their assets to blockchain.com or liquidated their holdings. Can you kind of tell us, if you could think back about 2 years ago, what that period really was?
It was super disappointing. When we applied for the bank holding company license, we'd gotten advice and some feedback that the activity that we were doing in buy, sell, and hold crypto at that time was permissible. When we were about to receive the approval for the bank license, we were asked by the regulators to agree to close it down within 2 years unless the regulation changed. It was pretty disappointing, but we felt like we were going to play the long term. And the long term was the bank license would be critically important to building a competitive advantage and giving U.S. consumers and our members the safest place to get their money right. And so we had to make a sacrifice. At the time, I was hopeful that over the next 2 years, regulators would come to grips with the importance of crypto and blockchain in our financial systems and make it permissible. Unfortunately, that didn't happen. This spring, when we saw the OCC's interpretive letters come out, and not only to give us the chance to re-enter cryptocurrency and blockchain as a business, but to do it in a holistic way inside the bank before it was outside the bank and the bank holding company. So I couldn't be more excited about what's happened over the last 9 months and really what lies ahead.
Yeah, Anthony, I feel like it's come full circle, right? You mentioned, you guys have entered back into crypto this year with the OCC guidance that came out earlier in the year. We've seen just a total 180 from the administration, from the regulators on crypto. SoFi just became the first nationally chartered bank in the U.S. to offer crypto trading to its customers. So even though you guys had to kind of retract on what you were doing 2 years ago, you still became, the first to offer that and achieve the milestone anyway 2 years later. What was the decision behind that? I mean, was it to kind of was it in retribution to kind of say, okay, we're still going to do this and we're going to be first? And kind of what has that experience been like?
Well, the first thing that I think that's important to distinguish is that when the OCC came out with the interpretive letters that banks could operate in cryptocurrency and custodying assets and digital assets, as well as providing trading capabilities, it was actually a step up from where we were before. When we had cryptocurrency in the bank holding company, we couldn't integrate it with the safety and soundness of our bank itself. And so when the proclamation came out from the interpretive letters, I knew that because it's at the center of what we do, we could enter every area that leverages the blockchain technology and cryptocurrency and digital assets more specifically. So we endeavor to do much more than we were doing before. So we just launched buy, sell, and hold, as you mentioned. We're custodian the assets, which we weren't doing before. That will give us an ability to do staking down the road. It'll give us ability to do secured lending down the road. We also have the opportunity to launch a stablecoin, which I'm super excited about, which is coming very shortly, which we can talk about more. And so I believe that blockchain and crypto and digital assets will fundamentally impact every part of our business, even our technology platform, where we provide banking technology services through a processing issuer platform will enable companies to offer their own stablecoin or leverage ours through a white label by wrapping it. Will allow people to custody their assets, and we'll do stablecoins as a service, wallets as a service, in addition to many other functions. So we're pretty excited about where we're headed. And we went from having the worst license, not allowing us to be involved with digital assets, to actually having the best license. And when we launched buy, sell, and hold crypto, we actually did it in a way where your cash comes in to an FDIC insured bank account. And every time you want to buy, we just pull the money out of that checking account in exchange for the assets that you're buying. And so because we are a bank, the money can sit safely with FDIC insurance. You don't have to move it to another account. If you want to pre-forward buy, you can pre-forward buy it with a stable coin instead of the digital assets that you want in particular. So a lot more functionality, and most importantly, behind the investment technology of a bank.
Yeah, Anthony, I love that you hit on the stablecoin. That's a really exciting development for SoFi. SoFi started out as a consumer lending company, right? We had Mike Cagney on the show a while back talking about the origin story there. But as you just mentioned, it seems like SoFi is going so much broader, working into the banks. I'm actually coming into the broadcast today from the visitors room at the SEC. So I know Chair Atkins has been very enthusiastic about the notion of an everything app. With the stable coin and the additional rails that you guys can run, what does this enable for SoFi, and how does this change how you guys see yourself like as a business going forward?
Sure. At the very high level, for those that don't know, when I took over the role of CEO in 2018, we fundamentally changed the strategy and the focus of the company. We wanted to be a trusted partner to help people reach the point that they had enough money to live their American dream, which we call their ambitions. And in order for us to help people that were underserved by the banking system, and these are people with above average income, call them overachievers, they were being well underserved by banks. They weren't giving a full suite of products to get all their financial needs met. And we saw that as an opportunity to really help people borrow better, save better, spend better, protect better, and invest better. And you need to do all those things really well so that you spend less than you make and invest the rest to get to the point that you have enough money to have the size family that you want, have the size home that you want, the career that you want, live where you want. And so digital assets were always part of that equation. Leveraging the blockchain to move money faster, to do it safer and cheaper is also part of spending better and being able to pay better. So we'll help people borrow better as well by using the digital assets as a form of secured lending, which will lower their cost of borrowing. In addition to giving them access to a broader way of assets to invest in. Down the road, you could see a lot of other functionality with digital assets and blockchains that will change the industry. What we're going to do with SoFi USD stablecoin is we're going to make it faster, cheaper, and safer for people to move money. So far, we've launched SoFi Pay, which is the ability to pay outside the United States to 30 countries. We're offering that at a very low cost. SoFi USD will be part of that payment capability. We also want to offer point of sale purchases and lower the cost for merchants and having consumers buy for them. We have a technology platform that does about 8 billion transactions a year. It's leveraging wires, ACH, debit, credit. We'll introduce SoFi USD stablecoin as a form of payment there. Again, faster, cheaper, and safer. And then I think there's a huge opportunity to help large companies do settlement 24/7. Today, the card networks are not doing settlement on Saturday and Sundays. Many businesses are not. And SoFi USD could be used to make settlement on a 24/7 basis, and even doing it much more than once or twice a day. In addition to that, we're launching big business banking. SoFi USD will be a key component for all of the companies that want to operate in fiat and crypto to be able to do it in one bank.
There's a lot of moving parts here, Anthony. I think what would you say is like the biggest goal for launching this stablecoin, and also which blockchain did you decide to use, and how did you kind of go about that?
Yeah, it'll be built natively on Ethereum, but then we'll obviously make it accessible on all chains of relevance beyond that. We're very big believers in open approach, permissionless approach. I would say the most important thing about SoFi USD is to allow companies and individuals to move money faster, cheaper, and safer. And if we do that, it'll have significant amount of volume. It'll give us the ability to really improve the economics for the financial industry more broadly. Because we are what's called an insured depository institution, we can take deposits, and those deposits are insured. And so one of the benefits we'll bring to the table as the only bank that has an open issued permissionless stablecoin is that the reserves could be sitting in the Fed bank account. And by having those reserves in our Fed bank account, we can ensure zero credit risk because we're not buying securities to make money off of the reserves, so that it'll be kept in cash. We'll earn Fed funds or thereabout from an interest rate standpoint. So there won't be credit risk, there won't be liquidity risk, and there won't be duration risk, which will make our stablecoin, in my mind, the safest financially backed one-to-one US dollar reserved coin. And that will also give us an opportunity to share some of those economics with other participants to increase the network effects of SoFi USD.
Will SoFi USD be used for payments just inside the SoFi ecosystem, Anthony, or will it be available on exchanges for retail purchases as well?
It'll be available on exchanges for retail purchases as well. And we're structured in a way that we can also provide interest to retail buyers of it or enterprises that buy it, because the nature of what we are as a company and our license as an insured depository institution, in addition to the way we'll construct the reserves, receiving approximately Fed funds.
Bitcoin might sound complicated, but the Gemini credit card makes it simple. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. No annual fee, and right now you can grab a $200 Bitcoin intro bonus. It's the easiest way to start building your Bitcoin stash. Go to gemini.com/CIA to learn more. Terms apply.
So Anthony, in a post-genius world, I feel like the motto is like, you get a stable coin, right? That Oprah meme, you get a stable coin, you get a stable coin. It seems like there are so many native stable coins launching on so many different ecosystems. Obviously, I think SoFi is in kind of a unique position just because you have all these touch points, both with the traditional financial kind of institutions you're mentioning, and also with this retail side. Why do you think it was important for SoFi to have like a native USD instead of just partnering with somebody like a Tether or a Circle and going that issuance route?
Yeah, well, first and foremost, the coin will not be successful if people don't trust it, if they don't believe the reserves are stable and accessible in real time. And I think as a insured depository institution, as a national bank that gets access to the Fed window and Fed bank accounts, we can do that more than anyone. And I didn't want to rely on some other lesser license. I mean, we have the best license you can have, in my mind, for cryptocurrency and stablecoins. Everyone else has a lesser license. And so it's safer. It'll generate more economics with less risk. That's very important. If we partner with someone else that has a national trust bank license, they are at risk of the regulation changing and having to actually apply for the license that we have, which is a more significant license. In addition to that, they won't have the same safeguards of safety and soundness that we have to have as an insured depository institution with FDIC insurance. They're really just a custodian, and they're not actually providing the breadth of the technology capabilities that we have that ensure safety and soundness or the risk management capabilities that we have and the responsibility that we have in protecting those deposits. And so, we believe there needed to be a national bank that was an insured depository institution that issued a stablecoin. And we think we're the most tech forward bank that has that license and is the best positioned from a network standpoint. And what do I mean by that? We have nearly 13 million members that will be using SoFi USD as part of SoFi Pay. We have a platform that does 8 billion transactions for enterprise customers that will be able to leverage SoFi USD. And of course, we're going after corporations now and being the bank of the banks and the bank of big corporations and fiat and in blockchain. So not only do we think we have the right regulatory framework and platform, we have the right technology platform and the right go-to-market approach.
Yeah, I have to dig in on that a little bit. I think we may have our first hot take on bank charter hierarchy here on the podcast today. I'm curious, when you say lesser license, I think I understand the argument around where the reserves sit and the potential liquidity or backstops for a stable like this versus someone who's relying on a different charter. Could you just dig in a little bit on what are some of the other, I guess, risks that you see with other sort of issued stablecoins, and also, do you think that the consumer, the borrower, the user of this instrument is really going to focus on FDIC insurance as a backstop? Because I do see, I think, a lot of Genius compliant stablecoins going back and forth on this, right? Like there's the reserve asset, there's the FDIC insurance, there's a lot of different pieces here. So what do you think of, I guess, like the different sort of licensing regimes that issuers are able to access now?
Yeah, and we have to bifurcate the conversation between pre-Genius and post-Genius. The lawmaking on Genius is in the process right now, and it hasn't been issued. And the OCC and Treasury are working on the lawmaking for Genius. So pre-Genius being enacted, we can actually operate a stablecoin as a bank, as an insured depository institution, which is called a national charter. The lesser license, which some banks or new companies got approved for late last week, those are called national trusts, and they are not insured depository institutions. They're not allowed to accept deposits. They are allowed to custody stablecoin and issue stablecoin and custody the reserves. We can actually put the reserves in an FDIC account because we're allowed to take deposits as an insured depository institution. In addition to that, we get access to the Fed window and to the Fed master account, and Fed master account pays out interest slightly below Fed funds without having to buy treasuries or of any kind or any other securities. So that's in the United States. Outside the United States, it's still a little bit of the Wild West. So there could be stable coins outside the US that say the coin is backed dollar for dollar or euro for euro, but you truly don't have visibility and transparency into where that fiat currency is going. It could be going into buying highly risky securities. It could be sitting in the equivalent of cash for that fiat security. And there's a broad area in between those two areas. Many companies outside the United States have gone to the trouble of getting SOC Type 2 exams, which provides insights into how they're reserving for that fiat against the stable coin. Inside the United States, whether you're a trust national bank or you're an insured depository national bank, there will be oversight on your reserves in both cases. The biggest difference is the trust bank does not take deposits and does not have access to the Fed window or Fed bank accounts.
With the depository license that you guys have, Anthony, do you guys see yourself filling the gap left by perhaps the crypto-friendly banks like Silvergate and Signature a couple of years ago?
That's correct. We do see a significant opportunity. We hired Ben Reynolds, who actually was the president of Silvergate and built the Send network. He's going to build out big business banking for us so that we can provide fiat and digital asset banking in one entity, in addition to building the SoFi exchange network, which will be ability to interchange fiat and digital assets in real time on a virtual ledger. So a big opportunity there to fill that void. When we were building SoFi buy, sell, and hold in crypto, and we started cutting deals with intermediaries, marketplaces, settlement agents, et cetera. They all only want to operate in digital assets as opposed to fiat, which was another motivating factor behind us wanting to build SoFi USD, so we didn't have to rely on somebody else's digital asset or stablecoin.
Yeah. On that note, Anthony, do you kind of see bank issued stablecoins as the future of digital dollars?
I do think it's one of the possibilities. Innovation has no limit, so there could be other inventions or imaginations that come to bear in the marketplace. I don't think many of the banks will be their own issuer of stablecoins. I think there's a few consortiums right now trying to determine what's the best way to work in concert with each other to be able to come up with a strategy. What we've said to big banks that are thinking about these consortiums is, why create a new company that has no history with their technology? It has no history from a regulatory standpoint. Just wrap our stablecoin. We'll give you largely 95% of all the economics we generate from the reserves. You can rebrand it in the brand that you want. You'll benefit from us having the best license you can have with oversight by both the OCC as well as the Federal Reserve. So instead of going through all that trouble, just partner with us and you'll get largely close to 100% of the economics and all the benefits of a bank. And so, we've seen this happen in other sectors and other industries where there's partnership among supposed competitors. And we think we can provide that same partnership. And in doing so, really bring and aggregate the economics to everyone in that club, so to speak, in that consortium.
Are tokenized deposits something you're exploring or maybe planning to offer in the future?
Yes, but they'd be opened. And so what we're constructing pre-Genius is actually a deposit token that when it sits on our balance sheet in our FDIC insured accounts will bear interest for the consumer. When that consumer wants to send that off of the platform, then it will become a payment stablecoin and will not bear interest off of our platform. But while it's on our platform, it will be insured and it will bear interest.
Anthony, I'm curious, SoFi has been a publicly traded company for several years now. You've had a lot of experience with either taking companies public or advising on, go-to-market IPOs, that sort of thing. There's been a lot of discussion right now as a lot of these crypto companies, whether it's through an ETF or a DAT or just a exchange going public, something like that, with grappling with maybe disclosures around some of these partnerships and products or interaction with like DeFi. How do you think, as a public company CEO, about the disclosures and I'm going to call them hassles and benefits of being a publicly traded company in this market?
I think if you want to be a company that consumers trust with their money, you should be a public company. It provides more transparency, it provides more oversights. At the end of the day, our services will not be successful if we don't build trust and reliability with our members. It's paramount to everything that we do. And if someone's shying away from being a public company or a regulated entity, but they want to take your money, you shouldn't trust them. We want to get over the highest bar. We think the bar should be high for everyone. Competition is important, but using regulation to benefit one sector versus another, I think is a mistake. We welcome the competition. We welcome the regulation. We are advocates for actually ingenious for stablecoins to be able to share interest or share rewards with consumers. Why not? It's an economic benefit that bank gets. The consumer should be able to participate in it. And so generally what I'd say is if someone's not willing to be regulated or they're not willing to be a public company, you really have to ask yourself the question, why? Isn't it to my benefit to have more transparency? Isn't the company more viable if it has ways to finance its business publicly, not just privately? I think it'd be a mistake for any financial institution to try to stay private so they could avoid disclosures.
Yeah, I totally agree with that. I think we're in a really interesting time where some of these products are bridging that divide, right? Between maybe it's a private fundraising mechanism, publicly traded asset, or maybe there's a publicly traded company accessing yield or other products that have traditionally been, just say, more opaque in the history of crypto. Do you think that regulated rails will be able to access those products in a compliant way, right? So I'm thinking of maybe something that's wrapped and is stable and deposited in a pool, And then users or shareholders of this publicly traded company are now benefiting from that product, but may not necessarily understand how it works. Like, how do you think about the interaction between those two sort of markets and what a public company's duty is to actually, in the spirit of disclosure and kind of the history of financial regulation, make sure that people are able to invest in what they want to invest, but also need to sufficiently understand what that thing is? Like, will you guys sort of broaden the spectrum as consumers create more demand for maybe more non-traditional assets, or do you see this kind of regulated financial core being the core of SoFi's business, for the foreseeable future?
Yeah, because we're a bank holding company, we can operate in activities that are not permissible within inside of a bank. So as an example, our SoFi Invest business is a broker dealer. It's not inside the bank, it's outside the bank. Our technology platform, Galileo and Technisys and all the related services are also outside the bank. So I'd like to say SoFi Technologies is a technology company that also owns a bank. We also own a broker dealer, two different regulatory regimes, two different purposes. And so we'll operate under the regulatory regime that is necessary to operate these different products and services. We want to help people get their money right, which means by definition, we have to have the selection. We don't want to have a hole in the products that members could need. One of the reasons why I was so confident we could take SoFi from about 650,000 members and $250 million of revenue to over $3.5 billion of revenue with 13 million members this year is because there were these holes in the services that large banks provided. If you wanted to go take out a mortgage and you make $100,000 or more, you'd struggle to find a big bank that would give you a mortgage. You'd have to go to the specialty mortgage lenders. If you wanted to take out an unsecured personal loan and you weren't worth $10 million and you went to your bank and tried to get an unsecured personal loan, the chances of them even offer it are pretty low. If you wanted to have your ability to invest under the same entity as the company that had your checking and savings account and your credit card, it'd be rare to find all three things under one umbrella. So we see those holes as opportunities. People often ask us, well, who do you compete with in student loan refinancing? I'm like, no one. The big banks don't even offer the product. There are some small entities that do it, but they're relatively small. So we'll never fall into that trap. If there's a product that's going to help our members get their money right and it requires regulatory licenses, we will go get those licenses and provide that product. If it doesn't provide regulatory licenses and it's unregulated, it'll be outside the bank in the bank holding company. And obviously that still needs to fit some type of permissibility. But so far, there's nothing that we've run into that's financial in nature that wouldn't fit under that umbrella.
Anthony, on the front of kind of coming down this regulatory path, obviously the timing is right now, and you guys had to really kind of wait for the, administration and all these different licenses to really kind of fit all these puzzle pieces together to make like a perfect storm, so to speak. And so now I'm imagining that a lot of other fintechs and other chartered banks probably will follow suit. Do you kind of see that as competition, or like, hey, we're growing the pie and this is a good opportunity?
I think the more entities that are under the umbrella of the current regulatory regime, the better. There's a saying that if we all live on the same street and your house is worth meaningfully more than mine, and mine for whatever reason is decaying and rotting and not taken care of, it's going to be hard for you to get a higher and higher value just based on your own home. And so we all live in the same neighborhood. We're all operating by the same rules. And if we can ensure the industry as a whole is safe and reliable, and we can educate the masses about the financial instruments and the risks and opportunities, then we'll have a very strong growing industry. If there are some outliers that want to operate outside the rules that aren't as acting as fiduciaries that aren't as ethical, it's going to be problematic for everybody. You're only as good as your weakest link when you're trying to build an industry. So, my hope is that we have an industry of companies that are led by leaders that understand that dynamic and they're willing to put the interests of their constituencies first, as opposed to cutting corners just to make money.
Gerald mentioned earlier, we had SoFi's co-founder, Mike Cagney, on the show a couple weeks ago. He was discussing how his company Figure offers crypto-backed loans and uses blockchain to connect traditional credit markets with crypto. How do you see SoFi's approach to crypto lending compare with what Figure is building in the markets at the moment?
I'm not familiar with what they're doing, but from my perspective today, we do unsecured lending to consumers. Our average loan size is about $30,000. Average interest rate's about 12%. It's a great product to refinance your credit card debt. A lot of 25 to 35-year-olds have a bunch of expenses that come all at once. It results in $10, $20, $30,000 of credit card debt. They're paying 25% interest on it. It's the biggest scam in the world. Sometimes they get hooked on reward points, not realizing the reward points are less valuable than the 25% interest they're paying on driving those reward points. So we have a great product that's half the rate, 12%. It's a term loan with a fixed rate. You can refinance it as much as you want if rates go down, and you can pay it off faster. We think we can offer that same product and have it be backed by digital assets. And so the rate would be even more attractive than 12% because we'd secure it with your digital assets. And so we absolutely plan on introducing that product. We have a woman that's running our crypto business that was a co-founder of BlockFi and knows that business incredibly well. And we have a pretty ambitious roadmap across a number of different products. We've launched SoFi Pay, which leverages Bitcoin and soon to be SoFi USD. We've launched buy, sell, and hold for consumers. We'll launch that for institutions in 2026. SoFi USD will be out within days. That will be another sort of part of the roadmap. And then secured lending and staking and rewards will also follow. So we're absolutely going to leverage secured lending and do it in a way that's very unique and attractive for our members.
Anthony, you mentioned the 12% interest rate, which I think probably is pretty attractive to a lot of borrowers in this environment. You mentioned that $3.5 billion in revenue that you're coming off of. There is a macro element to this as well, right? So we're coming off the heels of a 25 bip rate cut, which the market, it seems, had already kind of priced in. And then we're going into a spring where the future of the Fed chair is, I'll say, kind of an open seat at this point. And so not looking for any kind of forward Fed guidance here, but I am curious, like, how do you guys, given the business and sort of the heart and soul of SoFi, look at the macroeconomic environment and how rates kind of play into where you see this business going?
Sure. One thing that's great about a business that was built on trying to be a one-stop shop for consumers is that we ended up with a diverse set of businesses. Some of our businesses do very well when rates are high, and some of them do very well when rates are low. I would say generally, we do better overall when rates are low versus high. So we've been moving into a much more favorable financial considerations environment after seeing interest rates go up 500 basis points over 3 years. So rates have come down a little bit. We expect them to continue to come down. As they come down, a few of our businesses really benefit. We have a home loans business, so we do mortgages. We do both purchase mortgages and refinance mortgages, in addition to home equity loans and HELOCs. As rates come down, there's a lot more refinancing. That business will benefit pretty meaningfully. Additionally, as rates come down, student loan refinancing really benefits. And in that environment, you have to be somewhat cognizant of the fact of how is credit performing. Are rates coming down because we're going into a recession? Or are we in a stable economy? And right now we are in a stable economy. We've seen very strong trends from our members. We're growing our revenue 35% or more. Our outlook is very positive. And so, so far so good as we enter 2026. So I think we'll be in a pretty strong economy. I think we'll be in a rate declining environment. We have to keep watch outs on unemployment. Unemployment above 5.25% will start to become a concern on the economic side. Inflation, we'd like to see it stay around 3% where it is today. I think if you can keep unemployment below 5.25, and inflation at 3% or below, we're going to be in a really good environment where rates will slowly come down and we'll be in a good growth environment.
Yeah. Is there any chance that the data on the labor side, in your opinion, sort of ends up skewing the picture here a little bit? I agree with everything you said about the sort of strength and where we're going, but how do you think about just coming off the shutdown, sort of the quality of data coming in, and do you guys use any sort of specific tools at SoFi that you built to keep sort of a closer eye maybe on the market?
Well, we benefit from the credit data that we have on our loans and their performance. Now, we have a higher end customer that's $100,000 of income, 750 to 760 FICO scores on our loan. So it is a prime customer. It acts a little bit differently than the mass market and obviously subprime. But our credit, our credit's something that we watch very closely, and we've been pretty clear in saying it's within the range that we want it to be in. In addition to that, we're looking at spending on SoFi Money, which is debit spending, which has been really robust. We do look at third-party data from the card networks, Visa and MasterCard, which so far continues to look pretty strong from a spending standpoint. And then the macroeconomic indicators. So, I'm not sure where the jobs are going to come out and unemployment comes out over the course of the last month and going forward. We do anticipate that unemployment is going to continue to rise. As I mentioned, I'm not really worried about it until we start to get into that low 5% range. And we have a bunch of other indicators that we're looking at that are secondary and third order effect types of metrics.
I also kind of want to get your take, Anthony, on like forward-looking thoughts. Obviously, 2026 is right around the corner, and there feels like there's just like a ton of green lights and opportunity ahead in the US. So how would you kind of characterize the biggest, I already said opportunity, but the biggest like objective that you really want to get across in 2026 when it comes to digital assets and building off of, the stablecoin and the licenses and everything else in between?
Yeah, I think, from a member standpoint, I really want SoFi Pay to proliferate not just, from the US to international markets. I want to see the impact of SoFi Pay in international markets, and really start to build our brand in a more global way. SoFi Pay today, you can use fiat. We buy Bitcoin, it goes over the Lightning Network, gets converted to fiat on the destination end. Soon that will be SoFi USD, as I mentioned. But that's with the payment emanating from the US, and we think there's an opportunity for that payment to emanate from countries like Brazil and Mexico and the European countries, including and as well as the UK and a few other markets. I do think we have an opportunity to leverage that to provide SoFi USD backed accounts that would be combined with a physical or virtual card to enter some international markets. And I think that would be a great opportunity. I really want to see big business banking, the 3Bs, be successful and help banks and companies operate under one regime in both fiat and in digital assets. And then, of course, we want our members to get their money right, which means if they're going to invest in digital assets, which they will and they already are showing a real propensity to do, that they're doing it in an educated way, in a dollar cost averaging way, in a diversified way. And then last but not least, we really would love to see SoFi USD proliferate on the business side and used as part of the payments in the US that we facilitate through our payment processing, and really help merchants lower their cost and help enterprises move money faster and cheaper.
Yeah, Anthony, you mentioned building pre-Genius and post-Genius before, and we're technically still pre-market structure. We're waiting for a markup, potentially now has been pushed to first quarter 2026, and then a Senate vote. And this bill has quite a long way to go, I think, until it reaches the president's desk. But do you see that bill getting passed in quarter one? And if so, how are you guys preparing for that? Are you building sort of this roadmap with that in mind? Are you sort of building anyway? What do you kind of have in mind for this bill passing, and what impact do you see it having on SoFi's products and its clients?
Yeah, I'd say, I can't really predict the timing. I'll let others, prognosticate in that way. I'm focused on running our business.
Yeah.
I think two things. I think one, pre-Genius, we're going to keep operating the way we are right now. We are putting in place the changes that would need to be made post-Genius. I think Genius was a good step forward. The Clarity Act is another important step. I think it's a fundamental mistake not to allow entities to share interest on stablecoins with consumers. At the end of the day, if there's an insured depository institution, they're basically providing someone the ability to store their fiat at your bank. That money then can be lent out to other people at really attractive rates and not let the consumer participate in any of that at all when it's actually their fiat that's being stored at your bank just seems un-American to me. And it seems protectionist. Now, we will suffer competition because of that, but I welcome it. I want the American people to have the best, most competitive offerings we could have because that competition drives innovation and it makes our country stronger. We wouldn't have the Genius Act without that mentality, but it doesn't go far enough. Rewards and economic benefits from storing your reserves at any financial institution should be shared. The second thing is having clarity on who's regulating what is really critical. And so the sooner we get that, the better. And then last, there just needs to be, in many ways, not just a clear articulation of who's regulating what, but that regulation has to be uniformed and not changing with changes in the White House and changes in Congress. There's a real risk that these entities that just received these national trust charters, there's a real risk that under a different White House, under a different Congress, that they deem anyone operating digital assets needs to be an insured depository institution like SoFi. If you think about this industry and how large it could get, it may get to the size and scale where everyone should have that higher license, that higher bar license, and have to be an insured depository institution. So changes based on political agendas and changes based on what's fanciful of the day are not welcome. Consistency and clearness are what's needed.
Yeah, Anthony, I really appreciate the insights on the nitty gritty here of the inner workings of the financial system. But just given your background, I can't let you go without asking, how is it going at SoFi Stadium? So we're nearing the end of the NFL season here. I know you were pretty instrumental in putting together that deal. It seems like it's been a very successful partnership. What do you think about sort of two parts, like this aspect? Because I think back in 2021, maybe 2022, there were certain arenas that maybe did deals with companies that we won't talk about that who aren't really around anymore. But obviously you guys at SoFi, are in a very strong position and have a great, it seems like, partner, in the NFL. So how is that going? And you have any insights on the NFL that you can share with our audience or just me out of selfishness?
Well, it was a relatively controversial deal when we did it. But my view was that Stan Kroenke was building this unbelievable platform, and it would be, in my view, the eighth wonder of the world, and that it would be the largest stage and the most ambitious people in the world would want to, be able to perform inside of SoFi Stadium. Not just NFL teams, but the best acts in the world, the best sports competitions. And I knew that Stan was a man of his word and that he would build this exactly what he showed us on paper. And so I bought into that. And my view was it was a platform. And ultimately that platform would get exposure on national and global television. And it really wasn't about us signing up people on the day of a game or a concert to credit cards or SoFi Money accounts, but it was really about building the unaided brand awareness of our brand, becoming a household brand name, becoming trusted. Because when you are a partner with the NFL, it does give you a sign of approval. It does give you this good housekeeping seal. In addition to that, the number of people that watch a national football game in primetime television is about 20 million to 25 million people. And it's nearly impossible to be on one television show that has that many people. Many of the other sports, their championship games don't have the weekly television that's seen at the NFL. So my bet was there would be 4 to 6 primetime games at SoFi Stadium during the season, 2 teams, the Rams and the Chargers, and that we'd get to reach 20 to 25 million people with our name being mentioned a ton. We'd have to run commercials during those games so they knew what SoFi was, not just a stadium. But then the other part of it was everyone that watches Monday Night Football comes back every week, regardless of what teams are playing. So not only could we reach 20 to 25 million people on the night that it was played at SoFi Stadium, but we could come back the next week and run an ad, and the next week they run the ad, and we could ensure that we'd hit people 15 to 16 times a year with our ad, and the benefit of 5 or 6 of those events being games that are actually at the stadium. You know, whether the college football playoffs were going to play there or the Olympics or the World Cup, it was a hope. It wasn't part of the plan. And that hope became reality because Stan believed in building this enormous stadium that's, you know, the 8th wonder of the world. And those companies, those organizations, they wanted to be part of what he built. We had 6 Taylor Swift concerts. The demand for tickets or a concert have far exceeded the demand for tickets for anything else we've done. And most importantly, Stan and his family, as well as Dean Spanos, they've been, you know, just great partners, world-class partners in every way. The first year we opened the stadium was during COVID, and that was not easy to navigate and how we were going to handle the relationship and make sure we put health and safety of people first and not focusing on commercial benefits. And we were able to navigate that and many other things really well. And this happens to be the serendipity of both teams being really good. And the Rams are in first place for the NFC, and the Chargers are in a great position to win their division and ultimately get a playoff. And the more playoff home games we have at SoFi Stadium, the more exposure we get, and it all plays full circle.
Anthony, you talked about the ads as well and kind of the viewership of the 25 million or so that, you know, tune in. Do you think there will be a SoFi USD ad in coming 2026?
In the Super Bowl?
It's being debated. It's being debated amongst the people at SoFi. You know, it's funny now that we have all these diverse businesses, the fight for airtime across the businesses is pretty high. We have a product called SoFi Plus, which is meant to be the best, you know, financial services subscription in the world with more than $1,000 of value. And, you know, that product is an all-encompassing product, and it makes people realize what else we have. So they're vying for an opportunity to be on air during big events, as well as SoFi USD and our crypto business and our lending business. So it'll be a battle. I love competition, even internally.
I love
I guess
it.
we'll have to see what happens there. Last thing, Anthony, we always like to ask our guests before they go, can you tell us something that you've been watching that you think our audience should be paying attention to that we haven't already discussed?
You know, I think one of the things that may not be on the forefront of everyone's mind when they think about educating themselves on cryptocurrency or digital assets, whatever you call them, is at the very essence of it, it's a technology. And a lot of people want to focus it on as a form of payment or stored value or replacing currencies. And at the end of the day, it's a technology, and it's a technology platform. And if they take a step back and think about its platform and the characteristics that platform has and the network effects it could benefit from, they're going to play 2 or 3 stages further along in its evolution than what we're looking at today and what's being invested in today. You know, the industry right now, financial services industry, is one of the few that's benefiting from 2 super cycles at the same time, 2 technology super cycles at the same time, both blockchain and digital assets, as well as artificial intelligence. And not many people talk about those 2 things coming together. They will come together and there'll be a compounding effect. But the fact that both are hitting at the same time, it's going to drive significant second and third order effects that if you start to focus on, you can really get in front of the competition and the wave of innovation.
Anthony, quickly, it just came to mind. Do you have any thoughts on the open banking debate that's going on between the banking industry, but also the crypto industry and the CFPB at the moment?
Sure. I'm 100% supportive of open banking. It's the information of the individuals. They should have a right to access that information. There needs to be safety and security. There needs to be cyber defenses, et cetera. But in an environment where the technology can ensure safety and soundness and not disrupt the banking industry or otherwise, consumers should have access to their information. It's their right. Very similar approach that I have on interest. The fact that consumers are going to put their fiat into a stablecoin, that fiat will be used for a variety of different things, including generate net interest income for the issuer at around 3 to 4% in this environment, and they get none of it. It's unconscionable. It's just, I can't even believe, it's unfathomable that we're creating laws that prevent that. You know, many people don't realize this, but when you get a license to take deposits and they're insured, The money that you pay back to the consumer is your cost of that money that you then lend to somebody else at 25%, 12%, 25% for credit cards, 12% for unsecured personal loans. So they're making the difference between charging somebody else with 25% by using your money and paying you nothing. Now that's outside of the stablecoin world, but inside the stablecoin world, it's 0 and let's say 3 or 4%. And it's just not right.
Anthony, you hit the magic words as far as a combo there on AI and crypto revolutionizing a lot of the financial sort of landscape. Are you guys at SoFi enthusiastic about agentic payments, or do you see it being primarily like a research tool for your customers? How do you guys think about rolling out products that combine those two technologies?
I'd say we're not aggressively going out on new initiatives that combine both on top of each other. There's definitely opportunities. I'd say we've taken more of a platform approach to AI and its ability to reduce costs, reduce fraud, really have higher first contact resolution, shorten the time to resolving disputes or restricted accounts. But we're also using it to help people get their money right by helping them optimize where all their cash is or answering their questions about their own data. We have a product called SoFi Coach, which is sort of like a Gemini or ChatGPT interface that you can ask questions or prompts. And it's about all of your financial information that we have and others. And so as an example, I had some questions on my credit card bill. It wasn't clear to me what was driving the charges. When I looked at the transactions, I opened up, it's a product that's only used internally. I opened up SoFi Coach. I asked it a few questions and I got instant answers. They're very accurate and helpful. And so we're developing an ability to do that. We want to help our members understand every day what must they do in their financial life that day, what should they do and what could they do. And AI is a big part of unlocking that, but it's also a big part of resolving issues on the back end.
Amazing. Well, thank you, Anthony, so much for joining us today. And we're looking forward to having you back on the show soon.
Thanks, Anthony.
Yeah, my pleasure. Thanks for having me.
It's been great. Thank you.